The newest data suggests the U.S. economy is slowing down. Consumers are still spending and companies are still hiring and investing, but not at the same pace as last year. At the same time, the economy continues to defy predictions of an imminent recession. Economics correspondent Paul Solman has our report on what the numbers tell us and how that squares with how Americans feel about it all.
The latest GDP estimate of economic growth out this morning, lower than many had expected. Economist Justin Wolfers.
GDP grew at a rate of 1.1%. It's a measure either of how much we all produced, how much more this quarter than last, or how much we all spent, or how much we all earned. It's all three things.
1.1% is lower than it has been. Do your colleagues all agree that this is bad news or good news?
Well, on the one hand, it is a little lower than it has been recently and a little lower than many expected. On the other, all those people who are talking about recessions are starting to feel pretty disappointed because this economy keeps motoring along.
The answer President Harry Truman supposedly responded to way back in 1949 with, "Can't somebody bring me a one-handed economist?" So you're looking on the bright side?
I think there's a lot to like here. This has been an economy dominated by people talking about recession and doom and glooming their way forward. But every time you look at the actual numbers, people are spending, people are producing, the economy keeps growing. As much as people say they're worried about the economy, if you look at what they do, people are out there spending money as if they believe things are okay. GDP is back where the CBO thought it would be 4 years ago. Unemployment is nearly at a 50-year low. Wages are growing. Inflation is higher than it has been in quite some time, but it's on the way back down and starting to look like it's at more manageable levels.
The biggest problem has been inflation, of course, but Wolfers is borne out by prices in sectors we've been showing you. Eggflation, the souffle-like rise in egg prices, now dropping. Lumber up fourfold during COVID, back down near its level before the pandemic. Container shipping up 5 times just 2 years ago, with prices back down to where they were in 2019. The Economist magazine had the most positive take of all in a recent cover story, pointing out that America's GDP represents about 25% of the world total, almost the same share as it had in 1990, and that $100 invested in the S&P 500, a stock index of America's biggest companies, in 1990 would have grown to about $2,300 today. Invested in an index of the biggest rich world stocks, which excluded American equities, about $500. But if the economy is so good, how come so many Americans don't believe it or feel it?
When people are saying that they are concerned about the health of our economy, I believe them.
Economist Rakeen Mahbood has seen the latest consumer confidence numbers, which hit a 9-month low this week. And a Pew poll found that 58% of Americans think the economy is worse than it was 50 years ago.
We are in a precarious situation. We have, 9 consecutive rate hikes thus far this over the course of the last many months, and probably another to come. Those rate hikes, as Chair Powell himself has admitted, have not yet fully hit the system. And so there's a real chance that things will go south as we continue to see the effects of these rate hikes play out.
And for many, given inflation, things have already gone south. Moreover, says Mahbood,
we have a cost of living crisis in this country that long predates the current bout of inflation. The cost of essentials like childcare and healthcare have been putting burdens on family budgets for decades.
The wages at the bottom have been rising.
Wages at the bottom have been doing well, but wages as a whole have not been keeping pace with inflation. And I think at the end of the day, people are feeling that, right? People are feeling the cost of goods going up, the cost of essentials going up, and they're struggling.
Okay, so which economy does today's GDP number suggest?
If you look at our performance compared to our competitor developed countries, it's really good. So
the answer depends on context, says economist Douglas Holtz-Eakin.
Yeah, we've got problems, but we don't have the problems other people have.
So years ago, you said that the United States was the best horse in the glue factory. What did you mean, and is it still true?
We think of the glue factory as the place where, horses who don't have some other great function end up. And so we worry that somehow the U.S. has passed its prime, that somehow we're not the economy that we once were. And I just don't think that's literally true.
But the metaphor is that the American economy is going to be ground up into glue.
It is perhaps not the rosiest assessment of the United States as an economy or nation, but I'm an economist. I'm not a rosy guy, right? And I just want to remind people at the end of that conversation that, yeah, those problems are there, but we're doing pretty well.
For a horse in the global glue factory, that is. For the PBS NewsHour, Paul Salman.